Hi to everybody watching in, and welcome to today's event where we have the pleasure to present GreenMobility. To help us through today's presentation, we are joined by you, as well, CFO. Today's presentation, we will cover the Q1 trading update. I will not call it a report, but a trading update, fresh from the press this morning, 29% growth, good growth in customers, as I could see, but also somehow affected about your moving of cars between the countries, I guess. But I guess we will get much more into that. As always, ask your questions in the box down below. Do it through the presentation. I'll see if it fits, or else we will cover it in the end. But for now, I will hand the presentation over to you, Anders.
Thank you, Michael, and welcome everyone for this presentation. As Michael says, our Q1 trading statement, and keeping it a bit more light than a full report. But let's jump right into it. And as Michael also mentioned, a big part of this quarter, except besides of course running the business, has been the closing of Sweden and Germany, as we announced in the beginning of January. This, of course, also means that we have an update for our usual map of cities, where we've removed some dots, and that is also to show that we are now finished in moving the cars. I'll come a little bit back to that. But Sweden and Germany are both effectively closed by now. I've also put up our usual figures, and then we'll get into that on the next slide as well, where we can see the development over time. So these are more or less the standard as we see it. But let's jump into more specifically. And sorry, now I can see the slides as well. As we mentioned in the beginning of January, we sent out an announcement that we would refocus our strategy with the very specific focus of bringing the company into profitability in 2024 already. That, of course, entails quite some specific tasks, and one of them have been to close 2 markets. That has been our operational focus during Q1, and we started already in January, and quite quickly were able to move the cars. So all cars, which is 200 cars in Sweden, have been moved for Denmark, where they are now operational. The 300 cars we had in Germany, they have been moved and are now operational in Belgium and in the Netherlands. So no more cars and no more ongoing activity, at least for now, in those 2 countries. This exercise, of course, is also was initiated based on what we see in the market at the moment, specifically second half of last year, but also the uncertainty that we are in the middle of at the moment. Then, of course, taking some proactive measures, and by doing this, meaning closing the 2 markets, we are also able to ensure that we have enough liquidity to continue to running the business, and thereby no plans of raising equity in 2023, which was originally a plan of ours. So the focus is very much on running our existing core markets, strong markets, all of them, and continue our business on that. If we look at the numbers, of course, as Michael also introduced, 29% growth in Q1 compared to last year, which is, I would say, good growth for us, especially, of course, since this movement of cars does have an effect on revenue. There are periods where there's been weeks where cars are out of operations. So essentially, we've had 500 cars that at least haven't been fully operational throughout the quarter. So given that, then I think we're still in a good position on revenue. Net profit, of course, that's a good guideline also towards eventually profitability in 2024, but also coming close to a break-even by end of 2023. And of course, this is a figure that needs to go down significantly quarter by quarter. As we also stated that during Q1, of course, we've had some extraordinary cost in moving cars, but also winding down in the last bit of operation in Sweden and Germany, which totals up to approximately 6 million kroner, which is of course a non-recurring cost going forward. So in that already we see an improvement to be expected for the second quarter. Customers also continued growth. We continue to increase our customer base across all markets, which of course is what we should do, and then also what drives additional revenue and growth across the markets. CO2, of course, that usually follows our revenue more or less. Depends a little on the trip length we do. Trips also a good growth, of course, also to some extent impacted by cars being out of operations, or some of them have been out of operations for some weeks. Then, of course, the negative part is that we have to turn down the numbers, so that has a drop in percentage. And I think these are sort of the old lines on the business throughout the year, throughout the first quarter here. One of the things
I have a short question. This average trips, the 69, just to clarify, is that the DKK per trip, or is that
sorry, yes, that's average trip in DKK. So
okay,
all
perfect,
figures
perfect.
that usually I have a small, but for some reason that notice has disappeared here. All figures are in DKK, our reporting currency, and here for average trip, that's so for Q1, 69 kroner per trip on average.
Perfect.
And then, of course, one of the things that is still an issue, I think there are many in these uncertainty times, but one of the at least one of the cost lines and had a lot of focus last year and continue to have focus is charging cost. It has gone down in most markets, but in Denmark, the charging operators continue to keep a high charging cost, which of course still affects our operation in Denmark. And that is, of course, I think for many a frustration for us specifically as well, because you see the spot prices, you see the home, the private home electricity per minute, or sorry, per kilowatt hour has also gone down, but charging cost in public charging is still high. It is expected that that's what we also hear from the suppliers, that it will start dropping in second quarter. So we are very much looking forward to that, and I also expect that Denmark should follow the other markets that we are in. Michael, do we have some questions here?
Yeah, there's your camera has just gone off. You are in a hotel, but as long as we have the sound, I hope.
Okay.
Yeah, there was actually
cars. Yeah. So how many of the cars have been in transit this quarter?
Yeah.
And is there still some not running? So during the quarter, a total of 500 cars have been in transit. So 200 from Sweden and 300 from Germany. And all 500 are back in operation now in their new respective cities.
And maybe to be a little bit nerdy, but what those cars has been in transit, 500 out of 1,600 cars you have. Do we have some kind of a length where they have been between market? What has your fleet size gone down? On average, is that 10%, 15% with the cars being in transit? I don't know whether you have that number, Anders.
Well, it actually depends very much on country, because the actual moving of the car is the least amount of time. It is the registration of the cars in a new country, and some countries take longer. So the movement period can go anywhere from 1 week to 4 weeks. I haven't calculated the average, to be honest, but
no, okay, that's fair enough. But in rough figures, there has been some effect. 10% of what the fleet has been standing still compared. Perfect.
Absolutely.
And then there's also one we can take in the end, about the general trends. And there's a question here also: in which location are the customer growth coming from? Is it broadly? Is it Holland? Is it Finland? Is it Denmark? Because I kind of see we are a little bit nervous of the customer, but as you mentioned, but your customer growth is kind of looks healthy also from Q4 to Q1.
We actually have, I would say, we have customer growth across the markets, and maybe I'll jump into the individual market slides because then we can get into that.
Perfect. Let's do
that. We start off in Copenhagen, and of course, what you will see here, you'll see a drop in the first quarter, which is actually what we're used to seeing. If you go back year by year, there is a typical drop in first quarter. That's typically because we see a slowdown in spending across the board in specifically January, February. I think it goes in line with what happens for many people that after Christmas they save a lot, and January is usually a weak month. So nothing is unusual in that. And then of course we also have now cars from Sweden, roughly 250 of those in Copenhagen, and they have an effect on average revenue as well, of course. But continuous growth in Copenhagen as well. If we jump and then, sorry, I need to go to the next one here. We go to Aarhus. We see a slightly similar, although it has had a sort of different historic development. But of course, Aarhus is impacted as well by new cars, and Aarhus being at a slightly lower base than Copenhagen. There we've seen a slower uptake of new cars, but quite confident that we will see those cars being generating more revenue as we go along. Aarhus is traditionally a couple of years behind Copenhagen when we look at original starting point. And jumping to Belgium, and Belgium has had a very nice curve, and it's a little bit frustrating to see the drop, but it's directly related to the new cars that Belgium has received. So we moved 200 cars from Germany into Belgium, so essentially a doubling of the fleet in Belgium. And in that light, I'm actually quite satisfied that we don't see a bigger drop in revenue per car, because it does take, and Belgium was actually one of the countries where it took a little longer. Netherlands was the worst. We'll come to that, but it did take a bit of time to in-fleet cars in Belgium. And of course, then from one day to another, you have double as many cars. The customers have to see that and as well, and that's also factored into our expectations. We know that when we put in new cars, it always have an effect. It dilutes on short term the existing revenue per car. But we've also seen previously from Denmark, especially Copenhagen, where we've added cars several times, that's a trend that we catch up within typically a quarter or so. Then the Netherlands and Amsterdam, here you also see, of course, a drop, and Netherlands actually received the last batch of their cars from the summer. They originally we had planned 150 cars, and we had the last 35 cars delivered just around New Year's. And then we've added another 100 cars from Germany. So, of course, that has a direct impact on revenue per car when we put in a lot of new cars at the same time. And as well that Netherlands was absolutely the country that took us the longest of in-fleeting cars from Germany. And which means from the range I gave before, it took us roughly about 4 weeks to in-fleet those cars. But as I also mentioned, they are all fully operational now. So it's very much about looking ahead and building revenue in these cars in the new markets. We fully expected that there would be an impact. in these markets. Had we not moved them, then of course this graph would have been different because it would have been based on fewer cars, but then there would also have been some revenue in Sweden and Germany, of course. So there is definitely some effect this quarter on movement of cars. And to take the last market, Finland, and Finland has a I think I normally say it's our most seasonal market, and that's absolutely true. This winter there hasn't been any change. That Finland has seen some true winter weeks. I think I can truly say that with both snow and a lot of minus degrees, and that affects that market as well. But given that, we've actually been able to maintain the level from Q4 and almost in Q3, which I think all is very good. And now it's about building additional revenue, and we fully expect also Q2 to have a very positive effect in Finland. And maybe just to note that when you look at Finland over time, it is a little bit unfair to Finland because we started with 25 cars, and then in the summer of 21 we added we moved from 25 to 68, if I remember correctly. So we added a lot of cars, 2.5 times up, and then we did the same this summer. So of course that has an effect on when we look at revenue per car. Or we see good development in Finland, and we actually see some competitors entering the market as well now. So that also means there's something to be grabbed there, and we actually welcome that. So we look forward to continuing the business in Finland. Let's see if the camera will stay. But I think those were the markets. Mike, I don't know if there are any specific questions on the markets.
No, I just round up and we'll take the questions in the end. I think, Anders, that's the easiest part.
That's perfect. From the markets, maybe just a short comment. We, as part of our annual report, of course, we presented also our guidance for 23. And essentially, the slide here is just to reconfirm that we don't see any change to that remains our guidance. Of course, it's only been 3 weeks since we sent it out, so I think that would have also been quite a shock if anything were changed. But the focus is, of course, very much to continue growing the business in the existing cities we are in now, and growing the business on top line by 40 to 50%. So continue a strong growth compared to last year. With the cars that we've moved, of course, that plays a big part of it. We have moved cars from low revenue markets into high or higher revenue markets, so that in itself should generate quite a step in revenue during the year. Of course, net result is a key focus. A guidance of a loss of 35 to 45, which in itself will be a significant drop compared to 22, but also some that we are very dedicated towards, because that's the path to a profitability in 24. And then, of course, again, that we fully expect that we have enough liquidity to run the business. So no plans of raising new capital, at least not on short term, and not this year.
There's some questions. What is actually meant by break even on year end 2023? Is that a quarterly basis? Is it a month you will run that? I know it's a very specific question. I don't know whether you want to be that clear on that, but what is it we can expect there?
Well, let me start by saying that we want to do it as quickly as possible. But realistically, there is a process of getting there. Of course, that we can't miraculously solve it by next month. Then I can promise we will do it. But what we did say is that the goal is that we will come close to break even by end of this year, which essentially means in December. And I can tell you the entire team is pushing to do it as quickly as possible, but it has to be done in a healthy way as well. Our clear guidance, our clear focus is to have 24 as a profitable year. And when I say that, then it means it's profitable on group level and on a yearly basis. So I think that's the key part. Break even, I think we will see that in various markets hopefully during second half of the year, and then as a group, hopefully we'll be close to that by end of year. I think that's as specific as I can be right now. But
what is driving that most?
It will be a topic we'll cover during the year, and then we'll probably come a bit closer to it as the months go by.
Perfect. And what is driving that? Is that your revenue growth? Because you have 29 delivered. I do understand some cars has been in transit, so it's a tough comparison base to be measured where you had most of the cars operating. But is it revenue growth, or is it the cost still coming down? Your cost base you're looking at have you calculated in the electricity prices falling or anything else, they're gotta change what is your run rate now? Around 10 million in if we deduct the extraordinary cost. So what is coming from what, you might say?
Well, I was almost going to say everything, but you added a few things more that maybe is out of my control. Of course, top line has to grow, and traditionally we also see that it grows. This Q1 is traditionally also always our weakest quarter, but of course also a push in those markets where we now have more cars. We have a significantly higher availability and presence. That's key as well. But we will also have to work with our cost. And I think that's an ongoing thing. How do we make sure that we run our fleet at an even more effective pace? And there are always areas we can improve on. So it's both sides, but of course there are also some costs that are given. I do expect that charging costs, as you mentioned, will go down. But I can't build my business on when the charging companies will change their prices. But trust me, it's something we put pressure on them as well as all our suppliers. But this is an effort that we have to do in GreenMobility. I don't want to rely on suppliers doing the work for us. This is GreenMobility. You have to raise the revenue. And of course, we'll always work with our cost lines as well.
And then there's a question: why did it take so long in Holland and Belgium to get the cars in? I would have expected that it would take longer time in Denmark. I think it takes a long time to get a license plate here. So, any reasons why these markets are special?
Well, we did research it before doing it. And we did know that it would take longer in those markets. And Denmark is actually remarkable fast. So it simply ties down to in Belgium and Netherlands there's a difference when you register a new car and when you registered an imported car. And essentially we imported the car from Germany to Belgium and Netherlands. And you can say it sounds very stupid because we've moved the car, I don't know, 150 kilometers and within EU. But when it comes to motor vehicle registration, then you can just have to follow whatever the rules are, and there's a process time. So this was simply a matter of paperwork being done in one office, and then in Netherlands it actually has to go through two offices. So first you do one, and then you take the papers and you go to the next one, and there's a waiting time. Yeah. I was yanking my hair out of my head a couple of times, but that's something you have to work with.
And then let's take a kind of a broad question. Have you seen any macro change? The consumers, let's start by that. You were worried in the start of the year. It looks like we are still consuming, at least if we look at a lot of numbers. We can always discuss that, whether it's going to break or not here in second half, but that's guesswork. So what are you seeing? If looking at your figures, your trips were down, so the activity are you seeing anything in the activity that drives the usage of your cars? I guess are you more optimistic now than you were year end, or is it kind of the same?
I think and this is always difficult to really guess at, but I would say I'm cautiously optimistic. I think it goes for many businesses. Like you can all read the newspapers, and there's a lot of negative stuff. But when you go out at night, restaurants are still full. I was at the airport yesterday; it was packed with people. I'm like, okay, so people have money to travel. Okay, so it can't be all that bad. Of course, it's not as simple as that, but that gives me at least an indication that I think people broadly have started to adapt to this shock that everyone went through during the fall, where everything just came rambling down. And there are some changes in behavior, definitely by customers. Also, people selling cars to move into more shared mobility. We've heard that from customers as well. So I think it's still sort of moving slowly, but I would say it's moving towards the more positive side. People are adapting to an adjusted reality. Some costs have gone up. I'm still getting surprised when I go to the supermarket myself, and that of course will always have an effect. But people still need to move, and it's a question on what's the most flexible and cheap way of moving. And we're definitely cheaper than owning a car. We're cheaper than a taxi. So I'm still quite confident in what we do.
And then there's also the question: do you see any changes, environmental, legal? I guess you're still there's a lot of not legal stuff, but environmental stuff. Do you still see more support from the cities you are in? Are they still pushing your agenda? Is it? I guess it's also by the cost of running a city. It's kind of how welcomed you are and what they want to give you, like free parking and such stuff. Are you seeing any changes there in the great picture in the markets you are in?
On macro terms and on political side in the cities, no. If anything, it's being pushed even more. So there's a clear consensus that we need to improve our society. But of course, if people can't pay their bills, then maybe the environment is not top of their list, and I can fully understand that. But from a greater perspective, politically, and then absolutely, there's no wavering from political side.
And then maybe on the you mentioned Finland, that you have seen a new opponent up there. What about the other markets and maybe Copenhagen? There was a lot of discussion. What would your biggest competitor, the Viva, the car share now actually do? Anything you are seeing on the competitive landscape that is pressing you or either could help you? And I know you say that you also need competitors to build up the market, but I guess
I think I don't see a problem in having competition. We can definitely work without competition, but there is definitely movement in some markets. Our competitor in Denmark, I think, is still unresolved. For some reason, the acquisition of Arriva is still pending. I don't know why. I think that's not public knowledge, so that's why we were not able to really get that. But we'll see. In across Europe, we definitely see an increased appetite for some of our competitors in Belgium. We have Miles, which is German operator, predominantly traditional cars, so no electric vehicles. They have started to to change their fleet into electric. But that's in the beginning. They are growing, they're expanding, which I think is interesting. And they've entered Belgium now, so interesting. Something, of course, we follow very closely. But it for us, from my perspective at least, for now, it actually just adds to the development of the market, because you have more shared cars available. So that leads to increased use. Of course, at one point you will hit saturation of the market, but for now we are. I don't see an issue in it.
And then there's a final question. We can take that. Is Renault a shareholder or only a supplier of cars? I haven't seen any message from them, but
no. Renault is only a supplier. They have no shares in the company. We would have no, we would have been required to announce that.
Perfect. And I also seen you are going to other cars in at least in Denmark, so maybe
we have a few other cars. We have a few Polestars, so we have a few Maxus cargo vans as well. So, but I think it's, of course, and it's a topic that you can always sort of look at. Okay, we have a lot of Renaults. Why are they not involved, and so on and so on. But you still have to remember that when we started GreenMobility in 2016, the options on EVs were very, very limited. We chose the Zoe because we were very happy about it. We're still happy about it. It's a very simple car. We know it very well. We can fix it. We can repair more or less everything on it. Of course, there are a lot of new cars on the market. We see them. We also get to test a lot of them. So it's not that we are ignorant. We are very much aware, but we look for, as you know, we've moved into premium cars, so that's slightly different ballgame. But when we look at the sort of the space where the Zoe is, it needs to be a relatively simple car. It needs to be cheap as well. The Zoe has gone up, so that's a challenge. And the Zoe will actually go out of production next year, so there will be some change eventually. That's for sure. And whether it's Renault or it's another, that's way too soon to say. But for now, we've been very happy about this. The Zoe, it works very well, and it's good for the price.
And a little bit on the luxury car, the luxury segment, but the higher price car, the premium segment. How is that actually working? You know, that must be some of the first data you are getting in, whether for longer trips and people are willing to pay a little bit more for the comfort and I guess what is it called, the distance, that you can go longer distance. I am seeing a willingness to do that.
Yeah, the range of the cars is longer. So we have in Copenhagen we have Polestars. We've added the new Renault Megane, Renault again, in Amsterdam because that was the market where we could get some initially. And what we see is that, yes, there are definitely people, I think we have a lot of customers who are willing to pay a little extra to have a better car that can drive longer or just is a more premium ride. For some, it's day-to-day, but most of them will be either for maybe business trips or longer weekend trips. And they are performing quite well. And which is also why we want to have more of them. It's not going to be the main part of our fleet, but I definitely see a need to increase the share of the fleet. Also because with 5 cars in Copenhagen, well, it's difficult to find them. So we need more of them. So that's definitely a segment to continue development on.
Perfect. I think we got through all the questions. Thank you, Anders. Sorry for the little choppy pictures, but you are in a hotel, so we can't always make sure that the lines are perfect. Thank you to the audience for listening in and asking questions, and may everybody have a nice day.
Thank you, everyone. Thank you, Michael.